5. Good morning, everybody. This is the live market open for Wednesday, October 28th. I'm Yohay Elam of Forex Crunch and Market Movers podcast, and doing the show for FX Street. It's 8 GMT. As usual, we'll cover the recent developments, charts and levels, and the next 24 hours. If you can't see the chat box under the video, please go to tlk.io/fxstreet-forex-live-video. The address is here on the screen. I'm really looking forward to all of your questions. Today is Fed Day. But before we talk about the Fed, let's discuss the events we had so far in the past 24 hours. It was quite busy, and it was really all negative. Okay, so we had UK GDP growth coming out only at 0.5%. The pound was hit. We had durable goods orders. The headline was okay, but it was negative, but within expectations. Core durable goods orders fell 0.4% below expectations. Then came consumer confidence in the US, and also came out below expectations at 97.6. During the night, retail sales in Japan missed with a drop of 0.2, and the biggest impact we've seen on currency markets came from inflation data in Australia that came out only at 0.5, and that hit the Aussie hard. So let's begin with that. Good morning, Pan. Good morning, everybody. Looking forward to your questions. So here we have Aussie dollar. We talked about it trading in range between 72 to 72.80 was sort of the battleground, and we also looked at higher resistance at 73.60. But now, after this poor release from Australia, we had the pair fall all the way to 71.10, just above support here at the round number of 71, and still waiting for more news. The big speculation is there's higher speculation now that the Reserve Bank of Australia, the central bank, will cut rates. There's a meeting next week on November 3rd, and we'll hear from them. Of course, weaker inflation raises expectations for a rate cut. Okay, so that's the big event overnight, a fall of around 100 pips. All in all, weaker Australian dollar across the board. Good morning, Jacks are wild. Good morning, Rob. Good morning, JM, everybody. Looking forward to your questions. So that was the big impact from the Australian dollar. Let's talk about the British pound. We had the release yesterday just after the show. Also here we had a slip, and now it's still struggling to hold on to 153. Level below is 152, still holding above it. The British pound is still a relatively stronger currency, okay? Australian dollar is more vulnerable. Anyway, 153.70 is resistance, and high resistance 155. Okay, so we've seen it dip within the range, the British pound, and the small miss on UK GDP. Good morning, John, as well. And but we haven't seen it collapse altogether, okay? Because we still expect the Fed to raise rates in 2015, even though chances are lower. And the Bank of England, in England, they could just follow the Fed afterwards, okay? So we had all these weak figures, UK, but also in the US we had good figures, and the US dollar just shrugged it off, okay? Because first of all, there's tension towards the Fed, and markets didn't want to sell off the US dollar before. And in addition, I think that the US dollar is still the winner of this ugly contest. It's still the cleanest shirt in the dirty pile, if you wish. We have poor data everywhere else as well. Let's take a look at the euro dollar. Very much in range. It did try to go higher after the poor US data, but it got stuck at resistance there at 110.70. Higher resistance is at 111.30, as you can see on the chart, and support is, of course, at 110. Overnight, also, we've heard from Benoit Coer, hope I'm not butchering his name. Anyway, he said that he's a member of the ECB, of the European Central Bank. He repeated what Draghi said about a negative deposit rate as an option. Okay, so that also weighs on the euro. Regarding the Fed, before we talk about the Fed, let's mention Bank of Japan. We also had a development there. We have a decision there on Friday, just in 2 days, less than 2 days. we had a government official being open to action in Japan. Let me just get that quote for you. So it's Shibayama, his name is Masaiko Shibayama. He's a politician. He's an advisor to Prime Minister Abe. He said it would not be strange for the Bank of Japan to ease on Friday, and his reasoning was that the decision by the Federal Reserve back in September not to hike meant that there was no need to worry about an excessive slide in the yen if the Bank of Japan added stimulus this week. We haven't seen the yen falling. We did see it. Let's get this right here. Dollar yen, actually more of a safe haven reaction, more getting closer to the 120 magnate. Okay. Before we talk about the Fed, I see we have an early question from Jackson Wild asking, why is the pound action so weak? Figure it could roar with the euro weak or dollar strength. Is it being held down artificially? I don't think it's being held down or up artificially. I think the pound is a bit stuck because markets are waiting for the Fed decision, and because of that, because the Bank of England is expected to act after the Fed, markets are first waiting to see what the Fed will do before also acting on the British pound. Okay, this is very different from the reaction in the Australian dollar, which is also dependent on its own central bank, which has a meeting next week, and that's why we've seen this crash in the Australian dollar following weak data, and we haven't seen pound dollar crash on weak data in the UK. Okay, and the Australian dollar, by the way, it's not alone. Pan asks a question about oil, and that's exactly what I want to talk about. So, dollar CAD, we're seeing it rise higher. Sell-off of the Canadian dollar continues. Few reasons. First of all, gloomier mood in the world after the Chinese rate cut, after lower prospects means no demand for risk currencies, no demand for commodity currencies such as the Aussie and the Kiwi and the Canadian dollar. Secondly, we had the API data, the American Petroleum Institution data yesterday. It showed that inventories went up by 4 million inventories of oil, too much oil in the markets. So we have lower prices of oil, and WTI crude is at 43 more or less. Let me get the latest number there. But anyway, in our case, it means higher chance, less demand for the Canadian dollar. Just a second. And so we're seeing it fall as well. This is the weakness in the Canadian dollar. The New Zealand dollar is doing a bit better, still above support here at 67 cents, but a bit lower in the range, under 68, under 68.70. Below that, we have support at 66 and resistance is at 69. So these are the main currency pairs I'm watching ahead of the more all-important figure, all-important release, the Federal Reserve. We have WTI oil at 43.17 and Brent at 46.74. All in all, a bit lower, 0.5% lower on the day. Okay, now let's talk about the Fed. That's the big event of the day at 6 GMT, which is 6 also in London and 7 in Europe, because we are already in, we don't have DST here in Europe, and US still has. It's a bit earlier this time. We have one small figure before that, goods trade balance from the US, not that important, and crude oil inventories, which is important for the Canadian dollar. We're expecting another rise in oil. So what's about the Fed? Okay, today's Fed day, and let's talk about that. In September 17th, the Fed decided not to raise rates. It was sort of mostly expected by the markets, but not fully, because the Fed has been preparing us for quite a while for a rate hike in 2015, and data has improved. But it was not confident enough. The non-farm payrolls for August was weak. The Chinese stock market was weak. So the Fed talked about a stronger dollar. The Fed talked about China, not enough confidence in inflation, and the desire to see higher employment figures, want to see more improvement in employment. So all these four factors that I mentioned, inflation, employment, China, and the dollar, they haven't improved. Okay, so this is enough as a reason not to raise rates this time. Second reason is just technical. There's no press conference, no fresh forecast. So why not wait for December? Let's go back to the four elements. Employment. Since then, we had the NFP for September. It was weak, only 142,000. We also had a downwards revision for August, 136. Wages are going up only 2.2%, and that's on employment. Inflation, actually, this improved just a bit. Core inflation went up from 1.8 to 1.9%. China, well, it's officially stable. We've seen good GDP numbers, but they cut the rates, so maybe there's a reason why they cut the rates. Maybe there's trouble. And the US dollar has remained relatively strong since then. The big question is what articles that I've read this morning talk about a dilemma with the Fed. And we think we've talked about this in the past before. Because employment is still advancing, even though at a slower pace, should the Fed expect that this employment will eventually turn into inflation because more people have jobs, they spend more money, and prices go up, and raise rates? A specific reasoning for that is that short-term employment is very, very low. That means those that are unemployed for a long time, they're already out of the game and they don't make a difference. Okay? It's not my argument, it's things I've read. And the short-term unemployment is very low. That means inflation is going to go up because there's a good correlation between short-term unemployment and inflation. That's the Phillips curve. On the other hand, others see, well, global slowdown, still unconvincing inflation, stronger dollar that makes US exports weaker, and stock markets, which still expect more easing. That's the reason for the Fed to wait. What do we expect to get today from the Fed? First of all, no change in policy, nothing in terms of forecast or press conference. Everything will depend on the fine-tuning of the statement. So if the Fed says more or less repeats its previous statements, it's good for the US dollar because no news is good news. Since then, we had weaker data, let's say durable goods orders, retail sales, NFP, of course. So if the Fed still sees the economy as okay, the same as last month at least, no change, everything's cool. It's good for the US dollar. Still a chance of rate hike in 2015. If they acknowledge a weakness in the economy and sort of cast doubts about rate hike in 2015, then we could see the dollar fall. But remember, the dollar is still the cleanest shirt in the dirty pile. So even if the Fed is relatively dovish, the ECB is much more dovish. The Bank of Japan is more dovish. The Bank of England, even though it's closer to the Fed, it's still waiting for the Fed. Bank of Canada cut growth forecasts. Reserve Bank of Australia is expected to cut rates. So all in all, that's what, even if the Fed goes a bit dovish, it's still, the US dollar, I think, still remains king. Another last thing to watch for the Fed is that, remember, they have more information than we do, and they have the information for tomorrow's GDP figure. I believe they have it on their desks. So according to the statement, we could sort of guess what we'll see tomorrow in the GDP release. If we have, again, a worried statement, we might have poor GDP figures. And if we have an upbeat statement, we might have a surprisingly positive GDP release tomorrow. Expectations are low in any case. We're expecting only 1.6 annualized growth tomorrow. And according to the Atlanta Fed, the nowcast, the GDP now, it can be even weaker. It can be even 0.9. Okay, so that's for you, sort of Fed preview. Let's go and talk about other events, and I'm waiting more questions from everybody, of course. So let's look at the calendar, the fixed rate calendar on Forex Crunch. We had a few figures from Germany this morning. And also here, below expectations once again. Just have bad figures from all over the world, okay? So we have import prices year over year. They were expected to fall 3.5%. They fell 4% in Germany year over year. This, of course, adds pressure on the ECB to cut the negative deposit rate even further, more QE. Also month over month, 0.7 instead of 0.1. And we had also another figure. No, that's what we had this morning from Germany. US goods trade balance, not that important. It's expected to show a deficit of 65 almost billion after 67 last time. It's not the official trade balance, it's only the goods trade balance, so it's not that important. And here, the EIA in inventories last week, it jumped by 8 million. This time only 3.4 million is expected. That would be in line with the API. Anyway, oil, the amount of oil is growing, and that's, of course, negative for oil and negative for the Canadian dollar. Okay? Let's talk about other events. Oh, another rate decision today by the Reserve Bank of New Zealand. Okay? So we have New Zealand here. Interest rates, they cut it already 3 times this year. Let's zoom in here. Hope you know this functionality in the FX rate calendar. You can zoom in and out of periods. So it was at 3.5%, and they lowered it 3 times in the past 3 decisions. Okay, and this time official expectations are for the RBNZ, for Graham Wheeler and his colleagues, to leave the interest rate unchanged at 275. New Zealand dollar is quite stable in range. New Zealand economy is doing well. If you look at milk prices, well, last time they fell, but they did manage to stabilize. Housing market in Auckland is still maybe a bit bubbly. The New Zealand government has a surplus. Which government has a surplus? Not many. And these are the good things. The bad things are, of course, China. Less global demand, currency wars, a need for the New Zealand economy to weaken, the New Zealand Reserve Bank to weaken the currency. Okay, so I'm not so sure they're not going to cut the rates to 2.5. Many expect them to wait this time, but perhaps to cut in December when they have another meeting. I think it's an open event, and of course, it comes just 2 hours after the Fed, so we might not. Of course, the levels I'm talking about now could be very different after the Fed, but we're looking at 66 as low support, 67 above that, 67.70 and 69 as resistance. But these 2 decisions from the Fed and from the RBNZ are very impactful. We have a question from Pan. Aussie consolidating at 61 Fibonacci. Could it lead to head to 69? Must say I'm not following Fibonacci. I look more at support and resistance, but let's look at the general numbers, general levels on Aussie dollar. So I'm seeing a downtrend continue because of expectations for rate cut in Australia, sorry. Currently 71.30, a bit of a bounce, dead cat bounce from 71. Further support 70.40, not that strong. 70, the round number, is also, of course, eyed by many. And there's a strong technical support. I see the level of 69.35. We've seen there a double bottom at the end of September, right here. Can you see it? That's what I see as low support. So it's under that we have, yes, 69, which was early in September, a line of support. But I think that stronger support is not at the round number, but actually the double bottom here of 69.35. A lot depends, of course, on the Fed, and a lot depends on more data from China. If they, this time, if they provide more stimulus to the economy, I think it's negative because it shows panic. Okay, so these are the main events to watch. November 3rd, rate decision in Australia, and of course tonight's Fed decision in the United States. Okay, so maybe some consolidation ahead of the Fed, and then I believe we could see it fall further. Okay, these are the levels I'm watching. So for the European morning, we have quite a light calendar, and time for research, time for perhaps less action because we have tension. Then we have a very busy sort of US session. Let's see what we have tomorrow morning before the show from Australia. If you want more signs for rate cut in Australia or less signs, you could see the Australian import prices, which come out at midnight GMT. So if we look here on the calendar, we expect quarter over quarter. It's also a quarterly figure like inflation data, which makes it more important. So that's we're expecting here. It was minus 4.4 last time. Could be probably negative this time as well. And euro. That was export prices. Sorry. Import prices are expected to fall, I believe, as well. Anyway, these figures are important for the Aussie. And just when the show begins, we have a CPI, flash CPI for Spain, where I'm sitting here, and it's expected to remain negative, show deflation, add more pressure on the ECB to act. It's the preliminary figure for October. And yeah, we're expecting the HACP, the European standard, maybe to rise from minus 1.1, but not too much year over year. And yeah, and also retail sales here in Spain, not that important for the euro. Let's look a bit more at the charts. And of course, I'm waiting more questions from you guys. So we talked about euro dollar stuck in range, pound dollar clinging onto support, dollar yen looking for a new direction, not hugging so much, but sort of getting closer to 120 now. Dollar CAD lower because of oil prices. Kiwi dollar waiting for the RBNZ and the Fed. 67 is support. And the Aussie dollar here at hit hard by inflation data. Dollar Swiss high because of actually even breaking resistance. I don't talk about this too much because the Swiss National Bank intervenes here. So we broke above 98.40. Next level to watch is the round number of 99. Let's add it on the chart right here. We have intervention by the Swiss National Bank. That's why I don't like this currency pair or any Swiss pair. Euro Swiss is where they intervene most. We've seen after the euro fell because of Draghi, euro fell also against the Swiss franc all the way to 107.60. But then we had some action from the Swiss National Bank to send it back to around 109. The Swiss National Bank does not like a strong franc. Euro pound, we've seen it here show exactly what monetary policy divergence looks like. ECB is keen on more easing. Situation in the UK is better. We've seen pound dollar collapse. Euro pound collapse even below 72. Currently sticking to 72. Nothing of importance from the UK today. A lot depends on the euro. A lot depends on the Fed. So maybe we can add another support line here at 71.70 and higher. 72.60 is higher, weak but higher resistance. We have a question again from Pan. Thank you very much. Pan says, I guess the majority want 8 GMT start. We'll try to catch mostly on recordings. Yeah, I forgot to ask you, everybody here this time again, we want to ask you once again, if you prefer the show to start at 8 GMT, which is 8 in London, or 9 GMT, which is also 9 in London, or more simply put, the hour that we begin, the early hour that we begin this week, or the hour that we had until last week, okay? So please let us know in the comments or send Mauricio or myself messages, okay? Let's continue talking about currency pairs. Euro yen drops because of the drag and because the yen is receiving some safe haven flows. You know, all this bad news all over the world is bad for stocks. and good for safe haven Japanese yen. So we've seen a dip below 133.15, which is support. Next support line, let's draw it here on the chart. I don't know how many of you are trading this pair, but we're seeing more action. 132.25 is the next line of support. It used to be, until a few weeks ago, a pair of safe haven currencies. That means they traded more or less in tandem in narrow ranges. But now, because of Draghi, the euro is much less safe than it used to be. And we're seeing much more action. So Pan asks you to vote for 9 GMT. Some of you prefer 9, some 8. Please let us know. Okay, let's move on to one of your favorite currency pairs, pound yen. Okay, pound yen. Well, it did challenge 186, reached 186.20 even, made this sort of false break, a bit cruel. Now it fell back to 184.20 current trading levels. Let's modify the lines here. So current trading range is 184 to 184.50. Quite a narrow range, waiting for the Fed, waiting for the Bank of Japan. The pound lost some ground because of weak figures, especially GDP, but and the yen sort of floated back. Dollar yen floated back towards 120 after it also got carried away with the US dollar. And the US dollar strengthened on Friday. Now we're seeing it back to range. I believe there's still a potential for a rise, but it depends so much on the Bank of Japan. So we'll have to wait and see until Friday, early Friday morning. Okay. Some of you are interested in gold prices. So let's take a look at that. So also here we had a move all the way to 111.91, but we didn't reach resistance at 1200. No, so now we're 1170. This used to be a resistance line because it capped the pair here in late September. Now it's a bit more choppy, a bit of a narrow range. I think it's looking for a new direction. A lot depends on the Fed. Okay, let's go back to euro dollar. Stuck in range 110, 110.70. Okay, waiting for more questions. And also, let's talk about, let's see what else we have on the agenda today. Let's see what we have on the agenda for the full week. So we had, let's recap. On Monday, we had the German IFO business climate. It came out quite mixed. Better prospect for the future, but the current situation, not so good. US new home sales badly disappointed. That allowed some profit taking, some US dollar selling. Yesterday, Tuesday, we had weak UK GDP. It hurt the pound just a bit, waiting for the Fed. Then we had more bad figures from the US after the weak new home sales. We had durable goods orders, which missed, consumer confidence, which missed, but the US dollar actually shrugged it off, waiting for the Fed, and also cleanest shirt in a dirty pile. Today, we had the weak Australian CPI, Fed decision, RBNZ decision, we talked about that. Tomorrow we have US GDP. Let's look at the official expectations. It's the first release for the for the third quarter. It gets heavily revised. It doesn't matter. It still has a big impact. I'm expecting a big slowdown from 3.9 that we had in Q2, annualized, of course, to 1.6. Okay. We also have initial jobless claims. They were actually quite good in the past weeks, the lowest levels since 1973. So that's more than 40 years. And they're expected to stay at the same kind of levels, but it'll be, of course, overshadowed by the Fed decision the day before, and of course, GDP figures on the exact same day. And this time we have a more busy Friday. We have Japanese inflation as a precursor to the Japanese rate decision, and everything is open there. At first, we heard from the Japanese government that BOJ action is not likely, and the BOJ might just extend the time for reaching its 2% inflation target. But recently, we've heard different tunes. They say we might have action. It also depends on, it's also because of the action we had from Mario Draghi last week, and also because of what we had from the Chinese rate cut. So I think the Japanese central bank will also jump into the game. Okay, on Friday we also have Eurozone CPI. So tomorrow we'll get CPI figures from Spain and from Germany, but the most important releases for the whole Eurozone. We're expecting more of the same, deflation on headline, weak core inflation, and we have Canadian GDP to complete the week for Canada. Canadian dollar is suffering. Anyone has more questions? Maybe we'll look at charts that we haven't heard before. Oh, we have a question from JM. Where do you see Euro odd will continue higher after Aussie CPI miss? Let's look at Euro odd first of all. Euro Australian dollar. Let's see if we have it here on the chart, on the watch list. No, let's add it. Euro Aussie. Okay, this is a 60-minute chart, 1 hour chart. We had a big rise in Euro Aussie because of the inflation data in Australia, which came out below expectation. We see here quite a nice U-shaped recovery for this cross. Let's put a few lines here just to have things in proportion a bit. We've seen a break above this level here, 154. Resistance is futile. Okay, 158. Do I see more rises? I think, well, this is a bit sideways. Both currencies have suffered against the US dollar. Now we've seen some kind of recovery, but it's hard for me to say which central bank is more dovish, because the ECB is keen to act, the Australian Reserve Bank is also keen to act. Which one will be more dovish? I think the situation, just a second, just a moment. Sorry for that. The Reserve Bank in Australia has more room to cut, but the ECB is stronger. I believe that we have more room. I think that perhaps we'll see a fall from these levels and not a rise, because ECB is a bit more dovish than the Australian Central Bank. Situation here in the Eurozone is worse, so I'm not sure we could see it continue higher. We should look out to inflation data also in Europe, and to what the Fed does as well, okay? But I'm not sure that the direction is higher. Actually, it could be even to the downside. Let's look at the daily chart. Well, we've seen it rise from earlier levels, but I'm not sure that we're... I don't see a clear trend to the upside here, okay? Another question from Rob asks, if Draghi wants the money to leave by lowering the interest rate, what country will it go to? It's a great question, which means that I don't have a very clear answer, but it will go to, well, everywhere. First of all, it goes to the European trade partners, the trade partners of the Eurozone, which means Switzerland and the UK, which are the biggest partners actually within the continent. Okay, so the Swiss National Bank is easing, is working to weaken the Swiss franc. So there we have resistance. So the money will try to go to Switzerland. Some of it will, but it will not weaken the Swiss franc too much because of intervention. It'll also go to other smaller countries, and it'll go to the UK, which is just, of course, on the shores of the Eurozone, and also UK economy is doing better. So I do see a potential for the pound to rise against the euro further. We've seen a big correction there. Okay, we've seen a big fall of euro pound all the way here below 70, and now we've seen a correction. If we look at the chart, we can't say we see a clear trend, downtrend anymore, but I believe that fundamentals tell me that you could see a fall over here as well. And of course, it goes into the US dollar, the cleanest shirt in the dirty pile. And I'm not sure we'll see euro-dollar parity, but I believe that we could see a challenge of the year's lows. That means 104.60 that we've seen here in March. Currently at 110.40, we still have a long way to go. We have 108.10, we have 104.60. So the US dollar, United States of America, big country, even if they're not raising rates, a lot of money will just go to the United States, okay? So Draghi is set not only to lower interest rates, they're already at a negative with deposit rates, but also to print more money and hint about further easing, okay? So the United States and the UK are my favorites for the easy European money to go to. I hope that answers your question. I see many other people here in the room, in the chat room. I see Paul and Marcy, Riman, the Kayak, sorry, John, Serge, Jax Arwell, Jim. Your questions are, of course, very, very welcome. We have a few more minutes to answer a few more questions. Currently, euro-dollar stuck in a narrow range, listless, if you wish, looking for the next direction. Another question, a question from Paul. Good morning, Paul. Dollar Norwegian krone rise appears to be tiring on the hourlies. How do you see it? Well, another currency pair I don't follow, even though I have a good friend in Norway. So let's look at this currency pair. I'm not sure it's tiring. I see quite a nice trend. I see it more of a consolidation after the rise. I think there is more potential for rises of the US dollar against the Norwegian krone. The main reason for the weakening of the Norwegian krona, is lower oil prices. So it's not only Canada, it's also Russia, it's also Norway, also Venezuela, also Saudi Arabia. Currently at 850. Let's draw a few lines here. We have this high level that we've seen in late September. We have this one here, support 842, further support here 831.50. So, and currently we're just under this level here, sorry, right here, 850. So I see potential for more rises on dollar krona because of the weakening of oil prices, too much oil floating around in markets. Yeah, we did see quite a big consolidation. We have here a double bottom. Just above 802, 803 more or less. Yeah, on the daily chart, I see it maybe consolidation, tiring, looking for a new direction. On the hourly chart, I do see a bit of a momentum to the upside. Okay, a lot depends, of course, on the Federal Reserve, what it does today. If they talk about they still leave the door open for a rate hike in 2015, then we have potential for higher levels towards 858 more or less. Okay, so that's a dollar Norwegian krone. More questions? It's important to note that regarding oil, it has repercussions for the United States because why is oil actually falling? It's because the United States produces much more oil than it used to, and when oil prices fall, it hurts also the U.S. oil industry. But all in all, it's a net positive for the U.S. economy. A question from Jean: how do you see euro dollar during today before FOMC, rallying or dropping? Do you think it will test 110? Before the FOMC, let's go back to euro dollar. I see euro dollar staying in range. No significant releases, maybe a bit more choppy than now, maybe a bit more movements. Currently, it's quite dead, 110.25 to 110.60. That's only a 35 pip range. It's terrible. I think it'll stay a bit. Maybe it'll We'll see it reach towards 170 or reach down towards 110, but I don't think we'll see any breakouts before the Fed. After the Fed, a lot depends on the figure, on what the Fed says. If they express a lot of worry, we could see the pair recovering towards 111.30. If we see the Fed more or less with the same text, I believe 109.50 is the first line of support, and then 108.20, 108.10 is very, very significant support for euro dollar. I would not go into a trade before we have the news from the Fed. Okay. Another question from Pan. Oil seems to have buyers here at this level. WTI. Let's look at the oil chart. Why can't I find the oil chart? Looking for that. We do find levels, so I can't find the chart. Let me get that in order. Get a lot of figures here, but not oil. Anyway, yeah, we do find buyers here. There's still real demand for oil, but the direction remains down. The next big event for oil is the release of inventories later today. Okay. Of course, we have consolidation. We have a bounce. I still see it. As a dead cat bounce. Good morning, Simon. Do you think there will be an intervention in oil prices? No, not so fast. We've seen the OPEC members find it hard to coordinate policy between them. Saudi Arabia still wants to ensure its market share and could suffer lower prices. Other countries want to cut production. They want Saudi Arabia to cut production. We had a meeting between OPEC and non-OPEC members, between countries like Mexico and Russia, together with Saudi Arabia and others from OPEC. They didn't reach clear conclusions. We would have to see really a big coordinated move to cut production to see oil prices rise. But we have very flexible production in the United States. In the United States, they can turn on and off wells quite easily in comparison with the traditional production of crude. And we have Iran, a country that still undergoes sanctions. They're expected to return online and just add more oil to the markets. So I believe we have a better chance of seeing falls in the prices of oil. Of course, it's not a one-way street. There's always consolidation, and before with the next move, it's not always just down because we had bad news. We need more news. We have bids. We have, it's not a one-way street. Okay. Any more questions? A quick question. Now we're seeing euro dollar weakening just a bit since the beginning of the show, but really nothing significant. After last week's moves, the big falls here after Draghi, it's quite stuck. Okay, so and dollar yen getting closer to the magnet of 120, but nothing in particular. Okay, so I guess it's time for the wrap up. So this is the wrap up for Live Market Open, Wednesday, October 28th. Today is Fed Day. So let's so far we had, before we talk about the Fed, we had weak figures from all over the world. Weak GDP growth in the United Kingdom. Durables goods orders in the United States were bad. Consumer confidence missed in the United States. Japanese retail sales fell. Australian CPI missed with the lower than expected rise. German data, German import prices missed. The biggest impact so far is seen on Aussie dollar because it raises the chances of rate cut. We've seen the pair fall below support at 72. find lower support at 71, waiting for the next move. Other currency pairs are tight ahead of the Fed. Euro dollar 110, 170, resistance 111.30, support 109.50. Pound dollar clinging to 153, next support 152, resistance 153.70 and 155. Dollar yen getting closer to the 120 level it likes so much. Resistance still 120, 120, 18.70 support. Dollar CAD rising with the fall in oil prices. We have crude oil inventories today that could further push the CAD lower as dollar CAD higher. Aussie fell, New Zealand dollar waiting its own rate decision today. Many expect no cut from the RBNZ, but it's an open question. 67 is support, further support 66, 67.70 is resistance. And now let's talk about the Fed. The Fed has most things since the last Fed decision haven't improved. So we have non-farm payrolls was terrible. China is still showing signs of trouble. US dollar is still strong, weighing on the US economy. Only inflation ticked up just a bit. The big question is short-term unemployment. This short-term unemployment that is relatively low a sign that we'll have inflation along the road, and will the Fed be ahead of the curve? Still raise rates in 2015, still leave us with the hint for a rate hike in December. This is good news for the US dollar. Basically, no news is good news. If the Fed acknowledges the deterioration in the US economy that we had since, it's not only durable goods orders, NFP, it's also retail sales, it's also consumer confidence, then we could see the dollar slide. But remember, the dollar is still the cleanest shirt in the dirty pile. ECB is easing. Bank of Japan opened the door once again to easing on Friday. RBA in Australia could ease. Bank of Canada cut forecasts. Only the Bank of England is ready to hike, but it's waiting for the Fed. So atmosphere in the world is a bit more gloomy. We have all eyes are on the Fed, even though there's no press conference and no new forecasts. The big questions remain open. Every word in the statement will be scrutinized and analyzed. I'll take the opportunity to invite everybody. We're having on FX Street live coverage of the show with Valeria and Mauricio starting before the event. The event is at 6 GMT. Let's just recap also the event for today. Goods trade balance in the United States at 12:30. Crude oil inventories at 2:30 GMT. All important event. Fed decision at 6 GMT. 2 hours later, we have the RBNZ in New Zealand make its decision. And tomorrow before the show, Australian import prices and Spanish flash CPI just as the show begins. All in all, everybody's easing. The Fed could jump along, and if it doesn't jump along, it's more USD bullishness. So that's what's going on in the markets. I thank everybody for coming. Thank you for your questions. Waiting more questions. I take the opportunity once again to ask you about the time of the show, 8 GMT, which is 8 in London, or 9 GMT, which is 9 in London. This time that we started today, or the time we started last week. Yeah, you're welcome to, of course, tell about the show to your friends, co-workers, colleagues, family, and whoever you wish. Spread the good word if you enjoy the show. And yeah, so wish everybody a safe and successful trading day today. We'll be here tomorrow once again to, of course, analyze the Fed from all angles and to discuss the next event. Tomorrow we have GDP in the United States and lots more. Okay, so thank you very much, everybody, for coming, and see you tomorrow. Good luck. Bye-bye.